Is it time to finally give up on Ethereum? Haha, no. Look, Ethereum hasn't shown signs of life for the past year, but I am still bullish on it. This isn't just blind faith, but it's me sticking to my original thesis, which hasn't been proven wrong yet. So today, let's revisit Ethereum. I'll cover the fundamentals of Ethereum's utility, the technicals of its price performance, and my updated timeline for when Ethereum can reach new highs again. Now, is Ethereum's technology being abandoned? There is an overwhelming narrative that Ethereum is no longer good for blockchain technology and it's no longer competitive, and it's being replaced by other blockchains for smart contracts. I see this as a false narrative. The only viable competitor to Ethereum right now is Solana. Although Ethereum mainnet is being very scattered with many other layer 1 blockchains, the clear moat around ETH is still its utility and the Ethereum virtual machine. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Let's look at some technical analysis and what the charts are telling us. ETH is currently trading at around $1,800. At its peak, it's been up about 4x since the bear market lows in 2022. However, it has since retraced about 65% of the entire up move. To the naked eye, this looks okay on USD terms. We're still up from the bear market. However, there is a largely negative sentiment among crypto traders towards Ethereum because ETH has underperformed both against Bitcoin and most other altcoins in the last 2 years. Like we have seen earlier, here is the ETH versus BTC chart, and this is almost touching the 2019 lows against Bitcoin. You could say that there is good support in this previous cycle level, or that historically this ratio is a super cheap buying range on Ethereum. But remember the point I made earlier, we really need to see Ethereum start to get some life at these levels. If it doesn't, it means not only doom for Ethereum, but also doom for long-term altcoin investing. So the ROIs are good to be buying here, but you gotta be careful. I believe the real bottom for ETH BTC will likely come when global liquidity finally turns positive. I have made so many videos talking about the global liquidity concept and how it's the best indicator for altcoin seasons, altcoin against Bitcoin performance, and ETH BTC performance. You can check out some of my live streams on this altcoin season video talking about how money printing will trigger the crypto bull run. That will show you the clearest indicator mapping the two together over the past 3 cycles. In order to track global liquidity, you have a very convenient indicator that's free on TradingView called the Global Liquidity Index. When you use this indicator, make sure you go in the settings and check which liquidity sources are being included. When using the signal for altcoins, you only want to check central bank liquidity and you want to uncheck money supply liquidity. I have covered why this distinction is super important on my last video about Bitcoin and my updated Bitcoin strategy. You can check it out right here. TLDR here, global liquidity has signaled the tops and bottoms of the last 3 cycles when it comes to the tops and bottoms of ETH-BTC ratio. You see, when global liquidity topped in April 2018, so did the ETH-BTC ratio, and when global liquidity bottomed in August 2019, so the ETH-BTC ratio started its uptrend. And similarly, in December 2021, global liquidity reversed to the downside, and so did the ETH-BTC ratio. So more important than ever now, we need to see global liquidity actually start an uptrend, making higher highs and higher lows again. And we're starting to see early signs of that with this potential higher low being made right here. This does fit some of the macro environments and announcements that we're getting from the US Fed, which we will cover in a bit. I have studied global liquidity very in depth over the past 2 years. However, as Ethereum continued to go down, a lot of people have given up on it and are saying that it may never recover against Bitcoin. I actually sit in the opposite camp, and I believe we can at least see Ethereum return against Bitcoin on its ETH-BTC ratio towards 0.04 and probably 0.05 levels, which is somewhere around these ranges, and that gives us about a 160% outperformance on ETH versus Bitcoin. And I see this happening over this cycle. This analysis comes from the fact that most coins, as long as they're still relevant, in a bull market, they can recover to some extent on their BTC ratio. Here's an interesting chart taking the total 3 market cap minus USDT stablecoin divided by the total market cap of Bitcoin. This essentially calculates how the overall altcoin market, excluding Ethereum, has performed against Bitcoin in a bull market. The best tool to use here is the Fibonacci retracement tool. We take the January 2018 high and the December 2020 low. We see that by the 2021 bull market top, on average, the altcoins returned to about 0.618 on the Fibonacci retracement level. But most altcoins did not get above these levels on their BTC ratios. You can do this analysis on most altcoins that have survived multiple cycles. Cardano, BNB, Dogecoin, Solana, most of them have exhibited these levels of bounces on their second wave up. We are seeing this play out on Solana as we speak. Taking the Fibonacci retracement from the September 2021 high to the June 2023 low, Solana has exactly peaked at the 0.618 Fib retracement on the Sol BTC pair. We'll save this analysis for another video, but this could be one of the potential warning signs for Solana as well. So coming back to Ethereum, what is it going to take for Ethereum to reach potentially these ETH BTC ratios again? Very simple. From the 2017 high until the 2019 low, Ethereum bounced right back up to the 0.5 Fibonacci retracement level by the 2021 bull run top. This is lower than the average return that we saw on the total 3 or all other altcoin market caps compared to Bitcoin. We can take the Fibonacci retracement from the 2021 high to the recent low that we made in March 2025, and you see that the 0.5 Fibonacci retracement is already above 0.05 on the ETH BTC ratio. Even if ETH has very much diminishing returns and only gets to 0.382, that is still way over 0.04 on the ETH BTC performance. And that would still be a 2.5x from the bottom and about a 2.3x from current level. So for all the people that are saying, oh, ETH will never go back up against Bitcoin again, even when global liquidity conditions improve, and even when we have real alt season, I don't buy that. You're basically saying that this time is different and you're using the same argument against yourself. When in reality, this is exactly what we saw on Solana, for example, from the 2022 to 2023 bear market lows. As prices get lower and lower and you see your coin continue to decline against Bitcoin's performance, like on Solana, it's very natural to say that, oh, this coin is dead and it will never come back up. But on the same argument that you could have bought Solana around $10, you could be buying ETH at under $2,000 right now, and I think it's a good buy. So how does this translate to the ETH USD chart? Has the price actually bottomed? And would I invest now or would I be waiting? Truth be told, if I were to buy one altcoin right now, it would be Ethereum. Can the ETH BTC ratio head a little bit lower and touch the bear market lows? Sure, it's possible. But even if that happens, that's only about 15% away of underperformance against Bitcoin. After that point, if ETH continues to drop, then that essentially means all long-term altcoin investing will become questionable. In my opinion, anything around current prices between 1400 to 1800 is a great zone to be scaling into Ethereum. Sure, we are likely to see more chop in these ranges and form some sort of long-term bottom before global liquidity reverses to an uptrend and Ethereum can actually start an uptrend again. But I don't see us heading anything lower as long as altcoins as a whole is still investable over the long term. Among all the developers and users who are trading on chain, there are only two technology stacks that people actually use. First, you have Ethereum's EVM, and then you have Solana's Solana VM or SVM. All other technology stacks are either quite old and obsolete like Cosmos or Polkadot, or they're not competitive yet like Sui and Aptos with their Move VM. The layer 2 narrative certainly did not catch on for Ethereum. However, the fact is every single new chain that's being launched today is still using core Ethereum technology. Just look at Chainlist. All of these chains, although they're different, they all work with MetaMask, work with inferior nodes, and they are all using core Ethereum technology stack. Wallets, block explorers, programming language, mobile apps, nodes, RPCs, all of these are based on the EVM. When you look at all chains by DeFi activity, the only ones that are not using EVM right now are Solana, Bitcoin, Tron, Sui, Aptos, and then you go down the list, these are all EVM stacks. While people don't trade on Ethereum mainnet much anymore, they're still using its technology. The other major question is, can Solana replace Ethereum to become the king of smart contracts? Yes, that's definitely a possibility, and that's why I hold a large bag of Solana as well. But you have to recognize that Ethereum-based infrastructure has had years ahead of adoption that started way earlier than Solana. While Solana is very good for mobile use and fast trading, high-frequency trading, cheap retail trading using meme coins, Ethereum is still ahead in institutional interest and RWAs, where you don't trade that often, but you deposit large amounts of assets. We have to remember that Ethereum is still the only altcoin with a spot ETF that's trading in the US markets. Many other competitors have potential filings, but these could take 6 to 12 months before they are actually launched. Until that happens, majority of the institutional flow can only target Bitcoin and Ethereum. There's also the narrative of RWAs that's quickly heating up, and Ethereum is the default technology stack that's used heavily in RWAs. When you tokenize large amounts of assets using RWA or issue stablecoins that's backed by RWAs, all of these projects are done with Ethereum-based tech on EVM chains. Now, I know what you're thinking. All the fundamentals do not matter if Ethereum's price continue going down, especially against the rest of the market. And this is true, which brings me to the most important fundamental value that I see in Ethereum. And it is that it's by far the closest altcoin to reach a digital commodity status like Bitcoin's digital gold. Here is a thought experiment for you. If ETH actually fails to deliver meaningful gains this cycle and loses its status as the number 2 crypto, how many crypto traders will convert to being Bitcoin maxis? Think about all the relics from the past cycles. Polkadot, Neo, EOS, Tezos, so many different coins made huge splash but have since fallen completely into irrelevance. Ethereum cannot afford to turn into another relic of the past, not only for its own sake, but also for the sake of long-term altcoin investing as a whole. Being in crypto for the past 8 years, I have been through 3 cycles, and there are only 3 altcoins that have survived longer than 3 cycles and still had somewhat interesting performance against Bitcoin. And they are Ethereum, XRP, and Dogecoin. Out of these 3 coins, Ethereum is the most viable shot we have to become another digital commodity. I know people will say XRP, Doge, and even Cardano, Solana, etc. have outperformed ETH at some point, but there is a big distinction here. Long-term resilience and remaining relevant even after the first cycle and the first hype wave is super important. We can visualize this using CoinGecko's BTC ratio charts. Here's the chart of Dogecoin plotted against Bitcoin. Since Dogecoin launched in 2014, it hasn't really outperformed Bitcoin. It only had spikes of interest all the way until March 2021 around the TikTok Dogecoin craze. But since that huge wave, it never made another high again and has been on a consistent downtrend against Bitcoin. This means Dogecoin could really be a flash in the pan, and if it never makes a new all-time high again, you can't really say that this is a resilient investment digital commodity for the sake of being compared to Bitcoin at all. Now here is the chart of XRP plotted against Bitcoin, and you see a very similar type of scenario. Since it started in 2013, it had spikes of interest in XRP versus Bitcoin, but ever since its peak against Bitcoin in 2017, it has not made a new high in its Bitcoin pair. Although people made a lot of money in XRP over the past year in dollar value, if you held XRP since 2017 to 2019, you're overall down a lot against Bitcoin. Now here is the chart of Ethereum versus Bitcoin. And you see, since Ethereum started in 2015, it made a high on its BTC pair at 0.14, and currently that pair sits at 0.02. We are getting to dangerously close levels on the ETH BTC ratio. This is coming to the point where if you have held ETH from 2017 to 2019, you could start to go into underperformance category against holding Bitcoin. This is a big no-no for all of crypto. Let me draw some comparisons between crypto and other commodities. Here is the chart of silver plotted against the chart of gold. And you see over the past 30 years, silver has had periods where it had interest against gold, but sometimes it goes down against gold. Sometimes it's in a macro uptrend and sometimes it's in a macro downtrend. But overall, there are things you can do on silver versus just holding gold. You can't say that silver always goes down against gold. Here's another example of the chart of oil against gold. You see from 1986 until 2008, oil was on a consistent uptrend against gold. And ever since 2008, it has been falling against gold. But because oil has lasted for so long and we know that it's not going to fade into irrelevance, you can make an argument that there can be a shift in global policy, in some natural resource advancement, that at some point, maybe in the future, it could be worth holding oil versus holding gold as a commodity bet. Also, when gold rallies, it leads all other commodities to be interesting as well: silver, oil, copper, or any other interesting rare metals. This is the status that no altcoin has been able to achieve yet, and Ethereum is the only thing that is close to achieving that, to be compared alongside Bitcoin. Here is the chart of Ethereum versus Bitcoin, and you see this is the only altcoin that over the last 10 years could resemble something that follows the performance of Bitcoin but doesn't completely fall into irrelevance. Sometimes it goes up against Bitcoin, sometimes it goes down. So it's worth having this asset, and sometimes you want to speculate on it. To quote Benjamin Cowan's analysis, altcoins are oscillators to Bitcoin at best. And if Ethereum starts to only go down against Bitcoin this cycle, this is not something that you should be rooting for, because that essentially means most likely all other altcoins will only last 2 cycles at best, and we won't even have any altcoins that can oscillate against Bitcoin over the long term. Even if Solana or XRP or even Cardano catches on and replaces Ethereum at the number 2 spot, who's to say that they won't see the same fate in 2 to 3 years after their technology are also outpaced by other blockchains with newer coins at lower market caps with higher potential? Are we all going to dump Solana for the shiny new layer 1 token next year and repeat it every cycle? If we want to see other altcoins leading the crypto sector alongside Bitcoin, we have to be rooting for Ethereum's long-term resilience. Sure, Ethereum is not the most sexy altcoin anymore, but they have gone after all of the same store of value commodity status that made Bitcoin so valuable. Ethereum is very scarce, it's heavily decentralized, it has a real legal recognition as a commodity, and it has institutional adoption through ETFs. If these points are still not enough, then I highly doubt that any other altcoin will ever become the digital silver or digital oil. And instead, we will live in a perpetual market of shiny narratives that last at most 1 to 2 cycles before inevitably fading to irrelevance and giving all their value back to Bitcoin. Long story short, Ethereum represents long-term altcoin investing being viable as a whole. If you believe decentralization, scarcity, network effect all contribute to an asset being valuable and having a digital commodity status, then Ethereum is the only bet for that outcome. Okay, finally, let me give you the timeline on when the liquidities actually driving Ethereum can start to tick up again. Like we have shown many times on the channel, the main condition that drives ETH's performance and all altcoins performance is the global liquidity conditions and the US Fed's monetary policy. When the Fed injects liquidity, the rest of the world follows and global liquidity rises. The best way to follow this is by using the Global Liquidity Index indicator on TradingView. In the settings of global liquidity, you see that the biggest component, and the first one here, is the Federal Reserve System. This is the US Central Bank, or the Fed. 2 other biggest items on here as well, the Treasury General Account and the Reverse Repo Agreement. These are also coming from the US Fed. The world follows the US, and whatever the Fed does, all other central banks follow. This means we are back to the same signal that we have been discussing over the past 1 year plus, which is to wait until the Fed and quantitative tightening stops the runoff of their assets on the balance sheet, and to follow liquidity indicators to see when they can begin to inject liquidity again through some form of stealth QE. Now, I have to give a clear warning here that if you are using this indicator wrong and you are looking at M2 global or M2 money supply, this is not the way to use global liquidity and track it accurately. You see, when I take on all of the liquidity sources, including the raw money supply, this starts to show a consistent uptrend. And this is the confusion that a lot of people are making, which is that they believe global liquidity is already rising and the Fed doesn't matter. When in reality, you are including the money supply that doesn't actually flow into risk-on assets. So while there's always more money printing, and that does impact Bitcoin being this store of value and very similar to gold, it doesn't actually have the same effect on altcoins. So when using global liquidity to track altcoin performance, make sure that you are not including the M2 money supply itself. Okay, when can we see global liquidity index start to tick up? Two steps of this. First, we need the US Fed to end quantitative tightening. I have covered the last FOMC and exactly what happened in our live stream from 2 months ago. You can check that out right here. TLDR, in the March FOMC meeting, the US Fed has announced that they will slow the runoff of quantitative tightening to the lowest amount possible, to only $5 billion of capital runoff. They have reduced the monthly sell-off of Treasury securities per month to only $5 billion. This is the lowest amount that they can take before completely pausing. So most likely the next time they make a pivot at one of the FOMC meetings, they will need to announce that QT has paused. Now, when can this happen? It's really anyone's guess. The next FOMC meetings are May 6th, June 17th, and July 29th. The only two hints we have are, number one, from the January FOMC meetings, the survey participants said that on average, they expect the Fed to conclude their Treasury runoff by mid-2025. So this is somewhere around the next 3 FOMC meetings. But again, this isn't a guarantee. The latest deadline that we have on this event to occur is by Q4 of this year, around September to October. Most macro analysts agree that by August is the highest chance that we could have an official recession, namely if the Fed doesn't step in and pause QT. And by Q4, the chance of a recession will be much lower because either the recession will have been completely averted by then, or the recession has started and ended by then with some sort of emergency pause and emergency QE announcement coming from the Fed too late anyways. So both signs are pointing to Q4 being the deadline. Either the Fed steps in early and we don't have a recession, or the Fed steps in too late and we have some sort of credit event already occurring by August, September-ish. One last interesting note, QE likely won't come in the normal fashion. Jerome Powell has officially stated that they cannot announce a new QE program publicly and officially until interest rates are at 0%. This is an impossible task, which means we shouldn't wait till the Fed officials announce some sort of QE at one of the FOMC meetings. Instead, we are only going to get a pause of QT where they stop selling and they stop the runoff of their balance sheet assets, but they may not officially announce that they are going to start increasing again. Instead, we need to track global liquidity indices much more closely to see when these numbers can actually tick up. When it does, that means some sort of stealth QE injection is happening. So a quick summary on all the macro. QT will likely end this year. Earliest it can happen is in the May FOMC meeting, just 1 week away from the time of recording. If it doesn't end by Q4, the markets will be so bad that we need to prepare for a credit event, an official recession perhaps, that may cause a flash crash. Either way, when QT ends, the ETH BTC ratio should start to bottom, like we have seen in the last 8 years and last 3 cycles. That's going to be the clear buying signal for me to start scaling into Ethereum very heavily again. Finally, let me give you my current predictions and strategy on Ethereum. I have made my timeline and price predictions perfectly clear over the past 3 years on videos publicly. The only thing I'm going to be shifting here is the timeline. I believe we are going to have a long crypto cycle overall, as led by Bitcoin. And you can check out my Bitcoin strategy for 2025 right here. In short, I believe the Bitcoin cycle will extend until mid-2026. This means altcoins will likely have their own cycle that extend a little bit further into Q3 2026. So this gives us another 12 to 18 months of time for ETH to run its course. That's why I'm no longer forcing myself to sell all of my Ethereum by the end of 2025. Instead, I'm waiting until at least Q2 to Q3 2026. For price, I am keeping my price target of at least $10,000, ideally $12,000 for Ethereum. This is definitely not a popular opinion, and I am no longer seeing any Ethereum bulls on my timeline. But let me show you how I got to these targets very easily. I have a target for Bitcoin to reach $200,000 to $250,000 by the end of this cycle. And as stated earlier, I see the Ethereum to Bitcoin ratio getting back up to at least 0.04, probably over 0.05 again. This is simply following Fibonacci retracement of all other altcoins' performance against Bitcoin in a altcoin bull market. So let's say Ethereum gets back up to these ratios again. For a $10,000 Ethereum, all it needs to do is to reach a ETH BTC ratio of 0.05. And for Bitcoin to reach $200,000, my lowest target. Multiplying those two, that gives us $10,000 per Ethereum. And 0.05 would be a below average return on the ETH BTC ratio for a bull market. There are many cases where this can play out in our favor as well. For example, if Bitcoin only reaches 200K, but Ethereum reaches 0.06 on its ETH-BTC ratio, that brings us to our 12K target. Or perhaps Bitcoin reaches 250K, and in that case, Ethereum only needs to reach 0.048 on the ETH-BTC pair to be at $12,000. This is definitely not a popular opinion, but I don't see why we cannot target $10,000 for Ethereum. That's why I'm not shifting my price targets. I believe Ethereum can reach $10,000 by the end of this cycle. It will just take a bit longer to play out, potentially into Q2 and Q3 2026. Ethereum is not dead like many people claim. Much like how people were calling Solana dead at $10, people always like to hate on an asset more and more as the prices go lower. Go through my fundamental thesis from this video and you will see that Ethereum is the most important altcoin in the crypto space right now that needs to succeed in this cycle to show the way for all other altcoins to have long-term investment potential. I am not selling my ETH, and especially when global liquidity reverses to the upside with a Fed full pivot and a pause QT, I am going to be adding to my Ethereum holdings. Just because Ethereum has lagged behind for a longer period doesn't mean the thesis is wrong. It simply means that liquidity conditions are still tight, which is driving down all altcoins. There isn't anything wrong with ETH itself, and if you only follow crypto Twitter, you are within this bubble of degens with very short attention span and they jump from narrative to narrative. That is my thesis on Ethereum. I still hold a large percentage of it in my portfolio at 22%, and I will be adding to it when global liquidity conditions improve. I have been a Ethereum bull over the past 5 years, ever since I started making content, and I am not planning to stop until I have been proven wrong. Let's see Ethereum's performance when the altcoin season actually starts, and that will be the real test. As usual, if you want to check out my portfolio and see my actions in real time, make sure to follow me on X at VirtualBacon0x, where I will be sharing all of my portfolio actions live. That's it for this video. Thank you for watching, and I will see you on the next one.